please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A lot of domestic issues have been taking precedence lately, but global issues are not, we're not out of the woods just yet. Crude oil prices have jumped as OPEC in its weekend meeting in Algeria snubbed Donald Trump's call to increase crude production, saying that there is no need for additional supply at the moment. Not just that, oil has also been rising as the markets have tightened ahead of the Iran sanctions. So Brent crude almost at $80 a barrel now. David Lennox of Fat Profits joins us now to give us his view. David, hi, good morning. There are multiple issues which have caused crude to hit $80 a barrel. But what next?
Oh, good morning. Certainly, if you have a look at the rhetoric, the key one that we saw over the weekend was obviously, as you suggested, the Saudis coming out and saying that they're very comfortable with the level of OPEC production. It's around about 32.5 million barrels, which is about the ceiling that they had imposed on themselves. So they're looking to the future and suggesting that since we're going into the northern winter and what would generally be considered the quiet season for production and demand, that they see no need at this stage to implement any higher production out of OPEC.
Okay. How are you expecting this to pan out, David? First, sorry, good morning and thank you for joining us. But how do you expect this to pan out? Do you think there will be higher output? How long does it take to supply a little more? And therefore, your near-term range, does it remain at 74, 84? Or have you narrowed it down to probably, 78 to 84?
No, Latha, look, we haven't changed our range. This is our end-of-year price. So, and I think you did mention in the broadcast earlier that some of the brokers are suggesting we could see a spike in the oil price. Look, that's certainly a possibility, but we do think that with demand now potentially starting to soften with the northern winter coming on, that that's just going to keep the oil price somewhat in check. We're not moving away from our 74 to 84 price range for calendar year end. So we expect to see a little probably further tension coming into the supply side, yes, with Iran sanctions coming on board. But having said that, we do expect to see Iran oil coming out the back door as those sanctions are implemented. So from that perspective, there may be little change in terms of the overall impact. So we're just watching very closely. As I say, the northern winter starts to approach and just how demand does start to be impacted by that event.
Okay. All right, David, thank you very much for telling us that you're sticking to that range and that Iran oil can also come through the back door. We already know that there is a rupee for oil agreement that Iran has with India. So, yes, it's not that all of Iran oil will be unavailable. Thank you very much, David. And now to the top 10.
Yes, our research team is here to give you the list of top 10 stocks as we head into trade today. Of course, NBFCs will be in focus, but let's get our entire team on board. Anuj, what are you looking at?
So let's start with an NBFC, Edelweiss, Sonia. In 2 months, it's moved from 52-week high to 52-week low. It's remarkable the way it's moved. And we've been pointing this out for some time now that there's been some delivery-based selling in Edelweiss for some time now. So that's at least the near-term move that you had, that was over. On the green side today, I'm watching out for ONGC. It's a stock which has defended its 20 and 200-day moving average. And normally, strong stock in a weak market tends to have follow-through. And it saw delivery buying. Crude is close to 80. So good things going for ONGC after a long time.
Okay. Well, the next big story, which we couldn't pay attention because we were also worried about NBFCs and crude, is that quietly there has been some resolution for distressed assets. Tata Steel has bought Usha Martin. Nigel, impact?
Well, good for both the companies, Lata. They have bought only the steel business of Usha Martin. To give you the contours of the deal, 4,300 to around 4,700 crores. That depends on the working capital on the closure date. Positives for Tata Steel, they're getting a running unit, no gestation period. With their capabilities and their pedigree, they can in fact increase the EBITDA per ton by roughly around 2,000 rupees, could move to around 7,500 rupees, and also it increased their capacity in the long products business from roughly around 3 million to around 4 million tons odd. The problem is the debt is already more than 1 lakh crore rupees, and the biggest positive will be if they pull away from the Bhushan Power and Steel, then the street will really like it. The stock should open up in the green. In terms of Usha Martin, you could even expect the stock to fly away in today's trading session because finance cost was the biggest problem, close to 580 crores of finance costs. This helps them deleverage their balance sheet and also helps them keep the wire rope business, which is more profitable. Both the stocks should do well.
Okay, thanks a lot for that. So that pocket is going to be in focus. Here's more from Rajiv Jhawar, the MD of Usha Martin, on this deal.
We signed our agreement with Tata Steel for sale of our steel business, which is based at Jamshedpur, along with the iron ore and coal mines, at a consideration of 4,600 crores on a net, on a zero working capital basis. Because of the high leverage in the balance sheet, we took a call that we should look at divestment at one of the businesses, and so that we could grow the residual business. And Usha Martin is known for its wire rope business.
Okay, so those stocks will be on the upside perhaps today, but NBFCs, after that big thrashing it got on Friday, any respite post the RBI statements?
Well, I would think there'll at least be initial respite, but I don't know whether it will not get sold into. All we can say is that Reserve Bank and SEBI's statement may perhaps make some people think about redemptions. If the redemptions don't come, then there is some bit of a hope, but it's quite possible that it could get the recovery, if any, could get sold into. So I'm a little worried about those NBFCs that got a very big thrashing on Friday. However, there could be a sifting of men from the boys. It's possible that there will be more faith, therefore, or more wanting to lend or buy the CDs or the CPs of Bajaj Finance and Bajaj Finserv and Sundaram Finance. These are the, the companies which have a better track record. So there could be actually better gains for these NBFCs. That's a more likely scenario.
Okay, and talking about NBFCs, DHFL, India Bulls continue to be on our radar. Abhishek is here to tell us the latest on DHFL. Abhishek.
Well, Sonia, to begin with, the credit rating agencies have reaffirmed their ratings on DHFL, various papers that they actually assigned the ratings to. So ICRA has gone ahead with confirmation of its rating of A1+, while CARE has stuck to its AAA rating on the stock. What the management has come out with a presentation and said that they have anytime 12,000 crore of surplus in their balance sheet, which includes the undrawn bank lines. So therefore, if you look for September, they have a surplus of 6,000 odd crores. For October, they have 5,000 crores. So they are not worried about the asset liability mismatch that may arise that the street is fearing. Back to you.
Okay, thanks a lot for that, Abhishek. Of course, we'll watch out for follow-through on DHFL today. But Ekta, why are you watching out for Biocon?
Well, two pieces of news on Biocon. The first is that the US FDA has given a clean chit to their Bangalore facility. So it's been inspected with zero observations. So that's good news. Plus, the European Medicines Agency Commission has in fact given a positive recommendation on pegfilgrastim, which is basically the cancer biosimilar by Biocon. So that should bode well for them. The final approval in Europe is expected in November 2018. So this particular recommendation should be a positive for that.
All right, and thanks for that. And then there'll be a bunch of stocks on Sonal's radar also.
Good morning, Lata. Well, yes, I'll start with IDT Cementation. That stock is on my radar because the company has won orders valued around 850 crore rupees, and that is for upgrading passenger terminal building and airside facilities in one of the cities. The other stock that will be in focus is TD Power because the board will be meeting on September 26th to consider buyback of shares. Cochin Shipyard will also be in focus because they also have a board meeting on October 8th to consider buyback of shares. So these two stocks should do well in trade today. McLeod Russell will also be in focus because they are planning to sell 2 tea estates for a consideration of 200 crore rupees. The company spoke to us last week and told us that they will use this consideration to pay off their debt. The last stock in my focus is Quality because the company has withdrawn its QIP because of weaker investor interest, because of weaker market conditions. Expect some weakness in that stock today. Back to you.
Okay, thanks a lot for that. Well, let's do a quick recap of our top 10 stocks now. Stocks with positive news flow: ONGC, Tata Steel, Usha Martin, DHFL, India Bulls Housing Finance, Shriram Transport, Sundaram Finance, Bajaj Finance, Bajaj Finserv, Biocon, ITD Cementation, Cochin Shipyard and McLeod Russell, while stocks with negative news flow are Edelweiss and Quality. Also, just want to point out that the finance minister has put out a statement on Twitter where he says that the government will take all measures to ensure that adequate liquidity is maintained, provided to the NBFCs, the mutual funds and the SMEs. So that statement has just been put out by the finance minister on Twitter, saying that all measures will be taken to, NBFCs, mutual funds and the SMEs in order to address the liquidity situation.
Chicks Nifty is down about 20-25 points. Let's see if that's how it plays out, because we had a big decline, of course, on Friday. Hang Seng is down about 300 points. Ashwani Gujral, Sudarshan Sukhani and Mitesh Thakkar now join us. Good morning. Ashwani, Friday was rather manic. What's the call for today? If we have a 20-25 point downtick at open, is there a trade?
Well, good morning. The markets have entered some kind of a frenzied or panic kind of phase. In this phase, if you know what you are doing, you'll make a lot of money. If you don't know, you are likely to, lose your shirt. So this is, a warning that people should keep in mind, because a pullback intraday could be 200, 250 points on the Bank Nifty, or could be 80 to 100 points on the Nifty. So moves are very, very large. But overall, Friday was the day where, the back was broken. Now the issue is, you will not get institutional buying, because institutions like to wait till all the, problems are out. So whatever rally you get or whatever short covering you get, it will be very easy to go short and, for things to collapse. These regulators speaking, etc., they speak only when there's trouble. So I wouldn't really bother about them. Basically anything on the Nifty that you get closer to 11,200 thereabouts will be a good shorting opportunity. Similarly, getting closer to say 26,000, 25,900 would be a decent shorting opportunity on the Bank Nifty. I don't think NBFCs will recover substantially, and on all rallies, because people are up to their necks in NBFCs, they would look to exit. So right now, don't get into those, bargain buying and value buying, because it's probably only started on Friday.
Okay. Good morning, Ashwini. I know I'm skipping indexes and asking you this first. The one that will not be impacted by whatever the regulator says would be Yes Bank. That's a case by itself. What's the story there for Yes Bank?
See, again, why didn't institutions come in to buy it at 30% lower? That's a question for me. Because, that should be great value near, 200. But it appears there is more than meets the eye. And, a respected banker has been given 3 months. You need to know what's going on. And, financial sector, once these cockroaches start to come out, what will come out next, a snake or a crocodile? You don't know. So, wait it out, maybe add a little bit, but don't think this is the bottom.
Okay, a fair point. Sudarshan Sukhani and Mitesh Thakkar are also with us. Sudarshan, good morning. Every bull market ends with one big negative trigger. Do you think this could be that trigger that will put an end to the current bull market?
Good morning. Well, this is not a trigger. It's part of a correction that had already started. In your show, in Lata's show, I have explained 3 recurring themes. One, September series will be weak. We are in a correction of some kind. On Thursday, I said the lows have not been made. They have still to be reached. Now, this is just, some random event, some news that triggers of a larger move inside that ongoing decline. So I'll continue with the themes. First, the lows have not been made yet. We should see lower lows in October, not with the same intensity, I hope, but with a slow and orderly decline. So the Nifty should breach the levels we are seeing today in the SGX. If that is so, then October puts are a buying opportunity for Nifty positional traders even now. That's the first theme. The lows have yet to come. The second theme has been buy pharma, buy Reliance and buy IT stocks. That theme is recurrent, and pharma, IT and Reliance have outperformed, and they will continue to do so. So if you are looking for a positional trade on the long side or looking to invest, look at these 3 sectors. And the third theme was 10 days ago I told Lata that NBFCs are going to do what PSU banks have done. Well, they did it in one day. That was a little surprising. But don't think this is the end of the NBFC decline. It is not. Okay. We have seen how the PSUs have been bleeding. So don't buy NBFCs under any circumstances. The Nifty trade is buy Nifty October puts and expect a lot of volatility, up and down. And the stop loss is the cost of the put. But you will make money there.
Okay. I'll go to Mitesh as well. But Ashwini, before that, is this the right time to apply that cockroach theory? I mean, last time we had, of course, this theory being applied was in 2007-8 at the subprime time. But you believe this theory is fit for NBFCs right now? Because so far what we have had is one or two stocks falling the way they did.
See, what happens in financials is after a great run where they've lent left, right, center, once this trouble starts in one place, it tends to spread. So I would be very surprised that ILF is the only problem and that will get resolved. You anyway have a financial sector in trouble. On top of that, once people lose confidence, who is next? That game is very dangerous and it tends to spread and it tends to take everything with it. So after a great period for financials, this is a time where, all of them will probably give back half their gains, maybe from, all the way to from August 2013. So it will be a large correction which will feel like a bear market.
Okay, that's strong words. Let's get Mitesh's view as well for the morning. Good morning, Mitesh. First, the Nifty, Bank Nifty strategies.
Yeah, good morning, Lata. So I think, we were looking at 11,050, 70 being tested, but obviously they were exceeded given the fact that it was an extremely volatile Friday. For the time being, it's not been broken on a closing basis, so I still believe that 11,050, 70 should be your near-term level which you would be looking at support. And on the upside, 11,350, 400 now has been established as a very important supply zone, given that 3 or 4 intraday rallies have kind of ended over there. So for the timing, we are keeping a slightly broader range on the Nifty, which is 11,050 to about 11,350. Similarly, on the Bank Nifty, 25,000, 25,050 historically have been very strong pivots. We did test levels very close to that on Friday. So I think that becomes your support, while 26,000 or thereabouts, and I think Ashwini and Sudarshan both highlighted this point, 25,900 to about 26,000 would be an excellent shorting opportunity. So even I would be willing to go short or explore shorting positions once we have a good bounce back in the Bank Nifty, closer to about 26,000 levels.
Okay, so what about the stocks then? Mitesh, what would your stocks be for today?
I have 2 buys and 2 sells. Ashok Leyland is a sell. It's broken that range of 125, 135 and now can be sold around 124. Keep a stop at 127.5. Look for targets of 116. Dalmia Bharat is something which has also broken important pivot levels. So that's a sell with a stop at 25.33 for targets of around 23.90. 2 buy calls. Gas Authority remains on a buy list. It was a buy on Friday as well. Keep a stop at 384. Look for targets of 404. And Biocon, the chart structure I still like. Believe that it can have upside. So that's a buy with a stop at 663. Look for targets close to about 700.
Okay. Ashwini, there will be people with short positions and long positions in, say, a DHFL or in India Bulls. What would be the advice for both of them?
The issue is our long-term investors come in at the top. So right now is a bad time if you have DHFL from about 400, 500 to think that one day it will come back. Sometimes these things don't come back. And we know what happened with DLF from 1200, it's still at 200. So that way on rallies, even now, you probably need to exit. High rates, I think the other day I told you what happens with, the paradigm shifting. If you get rallies on NBFC for some reason from here, I think exiting would be a better idea, because the kind of collapse you are seeing, I don't think any white knights or, institutions will come in to bail these guys out. So that way, something has broken on financials, and if you don't exit now, you could risk losing another 40-50% here, because the rallies have been so large, 20, 25, 30 times, that you lose, 50%, and then you can lose another 50%, and still it will remain a long-term correction. Some people may not be able to take that.
Okay, so what are your stocks, Ashwini? What's on your radar?
See, BOB remains a sell with a stop of 114, target of 105. Reliance Capital is a sell with a stop of 342, target of 328. Repco Home is a sell with a stop of 470, target of 452. PNB is a sell with a stop of 75, target of 64. And Sun TV is a buy with a stop of, I think, 652 and a target of 680.
Okay, and I guess we have not even gone through Mitesh's picks. Mitesh? Okay, sorry, Sudarshan. Sudarshan, we just lost connectivity with you. Your picks?
Yes. Well, Lata, it's going to be volatile. So the levels are not so important as the theme is. LIC housing is a short sell even now. You know, it's not about companies providing, government providing liquidity. It's about investors thinking, do we have to pay 5 or 7 times book for these products now? So there's a significant bear market left. M&M Financial is a short sell, and so is Bank of India. Since I had earlier said that Bank Baroda will go into double digits, I haven't put that in my list. That's a long-term short. But Bank of India is a short. The two themes are short sells. There are two stocks which are buying opportunities. Again, I'm telling investors, don't miss Pharma, don't miss Reliance, and don't miss TCS on the buy side. So the two buy side stocks are Reliance and TCS. This bull market will be led by IT, Pharma and Reliance.
Story of the day, and perhaps for some time now, will be the IL&FS fallout, and if the Reserve Bank and SEBI statements saying that they stand ready to act will work. We have with us someone who knows the debt markets inside out, the Chief Investment Officer, Fixed Income at Franklin Templeton, Santosh Kamath. Good morning, Santosh, and thank you very much for joining us in our studio on a very crucial day. And you really hold the secret to what might happen in the equity markets. What's your sense? With RBI and SEBI saying this, will the redemption pressure ease?
So, Lata, let me put it this way. Last 25 years I've been working. I've never received so many calls from equity guys to understand fixed income markets. So at last, I think fixed income is getting its due in some sense. So if you ask me what's the big theme, the big theme was a downgrade by a AAA rated company. So we have enough NPAs in the system, right? And some things are getting resolved, and if you will take some time. But the big theme was a AAA entity going to default. So whenever such companies go to default or NPA happens, we typically put them in two buckets. First bucket is that your asset value is more than the liabilities, but there is a mismatch of liquidity. So we put them as a liquidity concern. Second, where asset value is lower than the liability value. If it's the first, that you are mismatched, there's some mismatch on liquidity, you need to sell some assets. Somebody has to handhold you for some liquidity, and things go normal. Fixed income side, you may have to provide something till the time the asset sale happens. When the asset sale happens, you can provide it back to 100. Equity guys can make a lot of money on this, because when this liquidity issue happens, the rating goes down, equity market will take it negatively, and then it can bounce back. Most of the steel companies, if you recall, 2 years back, were exactly in the same state. Assets, good assets, but liability mismatch. So if your asset got sold, and then it came back. Second set of companies are where the asset value is not equivalent to a liability value. So there can be two subdivisions into it. One subdivision could be where the money has been taken off, corporate governance issue, and there's very little value in the asset. So let's keep them away. Second type of companies where the asset value is lower than liabilities, maybe 10% lower, 20% lower, 30% lower. If everyone agrees that there is a 20% gap and everyone takes a 20% haircut, the equity value goes to zero, the company is fantastically normal. But if you delay this process and don't recognize it, the category A company will go to category B, because your interest keeps building up, you are not selling asset, and sooner or later you go to B and B will go to C. So most of the NPS will fall in this bucket. NBFC is a tricky thing. In NBFC, people typically feel NBFC is very high risk. So I've been hearing this from the last 25 years. But believe me, a well-managed NBFC, according to me, is better than a well-managed, on the risk side, it's better than a well-managed manufacturing company. Now, why is that? If an NBFC has X amount of assets, they don't have concentrated on any one industry. If you're putting a steel plant, the entire asset of yours is linked to your steel cycle. If you're putting a cement plant, everything is linked to a cement cycle. If you're NBFC and you're given loans to so many of different industries and companies, so obviously you're much more diversified. But there's a big fear on NBFCs because of the leverage in the NBFCs.
In terms of numbers, can you share some numbers with us? Has the redemption pressure gone up? I mean, what have the redemptions looked like for the industry, for your own company?
How did it look on Friday?
Okay. So I don't know if I can say this on national TV, but we have been seeing inflows in our funds. Right? So there are two types of categories in mutual funds.
In your fixed income funds?
In fixed income funds. One type of category where the inherent belief is that this kind of funds will only buy AAA and AA+. And therefore, these are patronized by large investors, corporate investors. The other set of funds are credit funds, where typically you have 3-year exit load, retail money comes in those kind of funds, and those are supposed to take credit risk and make some money on that. Unfortunately, this ILFS paper was, I think, in few cases in a AAA fund, which went default. Now, if you ask me, how does it matter if 1%, 2% loss on the NAV? It doesn't. No, you had GSEC falling by $10 in a year. Yeah. Right? There's obviously some negativity, but it's no panic. So similarly, a 2% fall in NAV or 3% fall in NAV, I don't think should be a big panic. But having said that, some large investors may say, very well, let me some redeem. But most of the other assets in those kind of funds will be highly liquid assets, maybe Government of India Securities, HDFC or LIC or PFC.
No, but they didn't turn out to be liquid. That is the point. When one fund tried to sell, maybe not even for a redemption pressure, maybe just to stay in cash in advance, the deal happened at 11%. So the deal happened, a good 3/4, 75 basis points higher than the previous deal. So what we are asking you is, now with the RBI and SEBI saying this, and some early indications that ILFS will be resolved, will any fixed income guy refinance an NBFC paper?
Obviously, yes. If we have seen 2008, 2009, where the entire world was collapsing, and NBFCs came back very strongly, why will not they come this time? And that, please don't read too much into that 11% sale. I can want to tell your viewers, if you want to sell a slightly illiquid GSEC, you may have to sell it at 50 paise lower than the market price. So big deal is not a big deal. Somebody had some redemptions on some view, or could sell some 100, 200 crores at slightly higher yield. I don't think that is any reason to worry.
So you think all the DHFLs, Indoubles and all will be able to refinance their commercial paper?
I don't want to comment on any particular company, but as a sector, if NB is a well-managed NBFC with a 5-6 times leverage, with 20% capital adequacy, right? If you have 5-6% leverage means 20% capital adequacy, 20% equity has to be wiped out before the debt guys get impacted. Now, do you think there will be 20% NP in the system? There could be 2 or 3 or 4. So the solvency is not an issue. On liquidity, you'll be surprised to know, I have just read some recent reports, most of the large NBFCs are positive on ALM. It means they have more assets maturing in 1 year.
They told us on the channel.
Yes.
They told us on the channel. Yes. And everyone expects that for the next 6 months, they will be able to, pay back, redeem.
Yes.
But the point is, will they get fresh money? The equity market is worried that their growth will be hurt. They don't expect default.
Okay.
But will you all give them new, will you buy their fresh offerings?
Frankly, it's a competitive world. If somebody offers me a higher yield, which I think the risk is low, if I need to compete against my peer group, I'll go and lend. And then second guy will lend and third guy will lend. But believe me, this will happen. It's not that nobody is going to lend to anyone. At the same point of time, I'm not an equity guy, but I can tell you one thing. Whenever this kind of a bit negativity happens, few companies benefit a lot. So mutual funds can invest theoretically 25% of our corpus in NBFC. Right? NBFC is now is a bit scary word. But they're very good NBFCs, promoted by very strong promoters. They'll get a lot of money. And if they are smart, they will offer you much lower yield than what they should. It's like what happened in 08, 09.
Yes,
SBI got all the money, right?
Typically, Sundaram Finance will get much better.